Hello everyone, good morning and welcome to today's lecture. So today we are going to continue the 500 series and we will be starting again with 501 audit evidence specific consideration. In the last lecture we discussed about 501 specific consideration for the inventory. This time we will go for we'll see about the litigations and claims, segment information, and we will take forward with the rest of the 500 series also. Okay. So, last time as we discussed, in 500 series that about the inventory, that how the application of 500 basically, you can say how to collect audit evidence in case of, specific areas. Let's say when a specific area is pertaining to inventory, then what we are required to do, like physical inventory, attending physical inventory, evaluating management instructions, okay, observing, inspecting, reperforming, all those things that we discussed in last lecture for the inventory. Now we will see what evidence is required to be collected when we talk about you can say litigations and claim. Okay. Now when I talk about litigations and claim, as I said, auditor is required to design the audit procedures. Auditor is required to design the audit procedures, okay, in order to identify litigations and claim. Now when I say litigations and claim, what I need to do with respect to the litigations and claim, what is my material issue or risk, you can say, with respect to the litigations and claim. See, I'll go down here. Now, when I talk about litigations and claim, the important issue for me comes is whether I have disclosed as a management, I have disclosed all the litigations and claims. Number two, whether their valuation is correct, or let's say liability assessment or provision or estimate, whatever I have made in that is correct or not. Okay. So in order to have that, in order to understand that particular thing, whether I have made appropriate disclosures with respect to the litigations and claim, or whether I have made appropriate provisions that were required for litigation and claim, okay, then in that case I need to perform some additional procedures. So when I talk about the assertion level of the risk that is there with respect to the litigation claim, I can say, okay, I can say that the first risk which is there, risk of you can say completeness basically, okay. When I say risk of completeness, that means all the litigations and claims have not been disclosed. Okay, so when I talk about risk of completeness, all the litigations claims have not been disclosed, plus you can say litigation and claims are not properly disclosed. And if you read the objective of this particular standard, okay, if you go and if you read the objective of this particular standard, what it talks about from the viewpoint of litigation, it talks about the completeness of the litigations and claims involving the entity. So this particular standard focus upon the completeness. Okay. Now what does it say is that, okay, with respect to the completeness, so litigations and claims that involve the entity, can have a material effect on my entity. Like let's say, for example, it's a very big litigation, tax litigation, where I have a huge one, can have a material impact on my entity or financial statement, and hence they are required to be disclosed and accounted for in financial statement with appropriate disclosures. In addition to that, whatever disclosure is required, there are procedures that we need to perform as an auditor. Okay. For example, obtaining information at the time of risk assessment, obtaining information at the time of understanding the entity, that is SA 315. Okay. So that we can become aware that what litigation exists. Okay. And whatever audit evidence we have obtained for the purpose of identifying the existing litigations and claims, or the litigations or claims that in which the company is involved. Okay, we need to consider the same for the purpose of risk of material misstatement, and we need to evaluate that particular misstatement to understand whether the disclosure in the financial statement is correct or not. Now, we also saw one of the essay previously, which talks about laws and regulations. Okay. So tell me one, like just a quick question, which essay it was there, which was, talking about consideration of laws and regulations? Which essay it was? Just a quick question. There is one good question. Who will set the parameters of completeness of litigation claim? I'll come into that in a while. I'll come on to that because that's one of the procedures that we will be discussing. But before that, which essay talks about considerations of laws and regulations? Which essay talks about the consideration of laws and regulations? Essay 250. Essay 250 talks about considerations of laws and regulations in an audit of financial environment. And that particular essay talks about direct and indirect impact of laws and regulations. Okay. On the same line, what we are required to do under litigations, under SA 501 with respect to litigations and claims is, in order to ensure completeness, or to decide whether the litigations and claims which are disclosed are complete, or whether the management has appropriately identified all the litigations and claim, there are certain procedures which are specified. Okay. First, we need to make inquiry of management. Okay. And if they have in-house legal counsel, okay, in-house legal counsel, then we'll go and we'll meet them. We'll conduct an inquiry to understand the whatever laws and whatever litigations and claims that have been disclosed. Then we will review the minutes of meeting of those charged with governance and correspondences between entity and its legal, or you can say external legal counsel. And the best one, and I can say easiest one, is the reviewing legal expense. Okay. So by this, I'll tell you one live example. By this way, we actually identified some of the litigation which was not disclosed to the auditor, and we, came to know about that particular litigation. So what happened that we were doing testing of the legal expense. Now, while performing the testing of the legal expense, what we used to do is, like whatever expense is there, let's say for example, FY20 expense legal was XX amount, and we used to bifurcate that. Okay, so legal counsel, legal person A, legal firm B, and legal firm C. Let's say, top 10 legal firms or top 10 their particular councils who they appointed or something like that. Okay, so we used to bifurcate the total legal expense between in top legal councils or legal firms. So we had some amount, okay, for them of FY20 as a base amount. Then for FY21 we made a comparative. How much amount in FY21 it's being paid to the same legal firm, and we saw increase with respect to legal firm A. Okay, there was a good increase of the amount which was paid to legal firm A. We selected more samples for testing, plus we made an inquiry with legal firm with management for legal firm A for you can say increased payment that were made to legal firm A. So we went and we asked why you are paying more amount to legal firm A than compared to the last year. What are the agreements or letter of what are the engagements for which you appointed legal firm A during the year, and all those details. We went and we asked a lot of questions and gathered a lot of evidence from that. Based on the samples and the engagement letters and the details of engagement we got, we understood that there are 6 cases pertaining to worker safety related, were going on, which were not disclosed to us. And when we had the estimate, okay, like what is the good and bad estimate, optimistic, pessimistic estimate for that particular ongoing cases or litigations, we identified that they had a huge amount, they had a huge impact on the entity, like they were having a direct impact on the entity. By this way, we identified the legal expense by reviewing the legal expenses, that okay, whether there is any legal litigation claim which is not disclosed to us. Now, if auditor assesses a risk of material misstatement regarding litigations and claims that was identified, and when the audit procedures performed indicate that there are other litigations and claims like this one, okay, which are not disclosed, okay, which are not provided to us, then we can send a management letter of inquiry to the management to understand why this was not disclosed to us, what is the litigation and everything. We can get more details from the management. Okay, Or even if you do not identify any such thing, let's say for example, I haven't identified this one, I'll remove this. Okay, I'll say for time being, I haven't identified this one. Okay, then what? Still, I can go ahead and I can send a letter to the external counsel with the permission of the management. Okay, that we want to connect with the external counsel. We want to understand which cases are going on and what are the the amount that is involved into those litigations and claims, and what is the you can say impact, potential impact on the entity for those litigations and claims. So what I'll do is I'll ask management. Okay, ask management to allow to contact external counsel okay. For that I can prepare like I can prepare a letter of inquiry and I can send it to the external counsel, like the confirmation, the confirmation are done. Okay, so there are cases when external counsel discuss with the management or discuss with the auditor, and there are lot many things then take part of those discussions. But let's say for example management allows us to discuss, then on the basis of that we'll gather the evidence, whatever discussion will happen and whatever information we'll gather. But what if management refuses? If management refuses to communicate with external counsel, in that case what we are required to do is uh, then we need to perform additional procedures if still we do not get the comfort that we require. Okay, it may happen that after additional procedures we have not obtained, auditor was unable to obtain sufficient and appropriate audit evidence. Okay, then I shall consider modifying the audit report. Okay, modifying the audit report as per SA 705. If I'm able to get the appropriate audit evidence, I'll go to the normal course and I'll see whether what is the detail required, what are the evidences we have obtained. I will evaluate the evidence and accordingly. Plus, I can take written representation from the management in this case. So, to support everything, to support this whole thing, inquiry, review of legal expense, I can obtain management representation. Okay, so that was pertaining to the completeness and accuracy of the litigation and claim. Any doubts? Any doubts with respect to whatever we have discussed? Okay. If no doubts, then I'll move forward to the next area, that is the segment disclosure. Okay, and then we'll take some questions. Now, the next area which is there is segment information. Now, what is we are required to do with respect to the segment information? So when I talk about segment information, what I need to do is basically, depending upon the financial reporting framework for the entity which is there. Okay. Now, entity, if let's say, for example, if entity is required to disclose segment information in the financial statement, then it is our responsibility as an auditor to ensure that the presentation and disclosure of the segment information in relation to the financial statement is appropriate. Okay. Now, the auditor is not required to perform audit procedures that would be necessary to express an opinion on the segment information presented on a standalone basis, but as a whole of financial statement, we are required to perform audit procedures. Okay, so I'll not think about the standalone, only segment related thing, but I'll think as a whole financial statement when I'm required to perform the procedures. Okay. Now, when you see the requirement of the objective of this particular essay, it talks about obtaining sufficient and appropriate audit evidence regarding presentation disclosure. So remember, 501 specifically talks about certain things. Okay. Specifically talks about certain things. One, its completeness. Sorry, it's too big. So it talks about completeness of litigation and claim. It talks about existence and condition of inventories. And then it talks about presentation and disclosure of segment. Okay. Because these are the crucial risks or, crucial assertions, even you can say, for which an additional information or additional evidence or additional audit procedures are required. So when I'm talking about, presentation and disclosure of segment information, what auditor is required to do? Pretty simple. I need to understand the method used by management. Okay, the method that is used by the management for disclosing the segment information, for you can say preparing and disclosing the segment information as per applicable financial reporting framework, plus I'll test that method. Now, what is this method I am talking about? Let's say, for example, an automobile company which is manufacturing and selling cars and which is manufacturing and selling two-wheelers also. So what that company did is it prepared, the company prepared the segment information, okay, for let's say car wise, let's say SUV, hatchback, sedan, and for two-wheeler, like, bike, and there was a separate section EV cars. Okay, so something like that, they prepared the segment, car and vehicle wise. Now, based on this segment, what they did is like they provided the information like whatever your sales was, your operating expense was, margin, then SNG, sales and general expenses. It's SCNA. Okay, then you can say other expenses. You get a net profit. like this way. Okay, so they provide this kind of information. Now, to have this kind of information, they might be performing something, that they are bifurcating on basis of some particular detail. They might be, bifurcating on something, like some detail might be there. For example, how they are able to identify, okay, this is a sale of hatchback, sedan, bike, or something like that. So there might be something, background, a system or a way to identify. Okay, let's say for example, if I'm incurring an expense, uh, let's say for example, expense related to one of the showroom, how they will identify to which particular category that expense should go. Should it go to the hatchback? Should it go to the sedan? There should be some way or methodology to, allocate the expenses between the segments. Now, first we will understand the method that is adopted by the management. Number two, we will test that method if it requires any calculation, any allocation, or any such thing. And then after, testing and understanding that method, we may perform additional analytical procedures or other audit procedures as necessary. So plus other audit procedures and analytical procedures as necessary. Okay, so we may perform that. So that is something, we may do for the segment information. Now, when I talk about, segment information, what I can do is, like, as I told you, sales transfer charges between the segments, comparison of budgets and other expected results, or you can say allocation of assets. This is only P&L. This one, what I'm showing you is only P&L. When a company prepares segment information for the balance sheet items, allocation of, assets and liabilities, consistency with the prior periods, there are a lot many things that we are required to see. Let's say for example, there was one asset which was last year shown in the hatchback. Now this year is, shown in the head of segment, sedan. Why? We need to see how much consistency is there. So all these things, all these factors are important. Any doubt with respect to segment information? Okay, so one question is, who will set parameters of completeness of litigation? See, as I already, we discussed from the start of this particular, standards, or even there are some inherent limitations. You cannot identify 100%. So when we talk about the completeness of the litigation and claim, okay, and we do provide reasonable assurance. Okay, we provide reasonable assurance. Now, considering all these things, you need to perform audit procedures. You need to inquire with the management, all those things, reviewing minutes of meeting and everything. Okay, to ensure the completeness. You cannot give absolute assurance. See, now parameter is something you are talking about. Okay, how to set an parameter that, okay, whatever litigations have been disclosed, they are complete. We cannot set parameters. We only can provide an assurance. Okay, that's a reasonable assurance. Okay, we have performed all the procedures and nothing has come to our attention which can lead us to believe that this particular disclosure is correct, is not correct. That is something, the completeness of the litigation and claims that you can give. Okay, I can say I am reasonably assured that, whatever disclosures have been made are complete. So there is nothing additional or, information that can be required to be reported and which is not being reported. I hope I have answered your question. Any doubts? Any doubts? Okay. Let me discuss one question. Wait a minute. Okay. So this is one of the good questions that I want to discuss. COCEYX Limited supplies Navy uniforms across the country. The company has 3 warehouses at the different locations throughout the India and 5 warehouses at the borders. The major stocks are generally supplied from the borders. COCEYX Limited appointed Messrs. OPEC and Company to conduct its audit for the financial year 2021. Mr. P, the partner of OPEC and Company, attended all the physical inventory counting conducted throughout the audit, but could not attend same at the borders due to unavoidable reasons. You are required to advise Messrs. OPEC and Company how sufficient and appropriate audit evidence regarding the existence and conditions of the inventory may be obtained. How is an auditor supposed to deal with the attendance of physical inventory count when it is impracticable? Okay, so these 2 things on which we are required to answer. Yeah. So, okay, you tell me how sufficient and appropriate audit evidence regarding the existence and condition of the inventory can be obtained. How can you, obtain about the existence and condition thing? What you can do in this scenario? Trust me, we have discussed this one and it's pretty easy. Okay, good money. Come on, guys. What things you can do to ensure the existence and conditions of the inventory? Come on, guys. Pretty easy. We have already discussed this particular topic in last lecture. Okay, I'll show you. So for existence and condition of the inventory, it's pretty simple. What do you need to do? Attend physical account, or you can say evaluate management instructions and procedure for recording inventory, observe the performance of the count, inspect the inventory, perform the test count. Remember? Inquiry, observation, inspection, re-performance. That's the thing we are required to do for the condition and existence. There is nothing additional that we will do. So, so to perform, or with respect to the condition and existence, we may require to perform these particular activities. We are required to we can actually gather, based on this particular activity, we can gather more evidence. See, what we can do is attend the physical count of inventory unless it's impracticable to do. Then evaluate the management instruction, observe the performance, inspect the inventory, perform the test count, perform the audit procedures over the entities inventory records to determine whether they actually reflect the actual inventory and count. Simple. That is the thing you are required to perform. Then number 2 is how is an auditor supposed to deal with the attendance at the physical inventory count when it is impracticable? So remember the condition mark that we discussed when the physical inventory count is impracticable, what you will do. Now, why they are saying it is impracticable? Because they could not attend the same due to border locations and unavoidable reasons. Okay, good, Shailendra. So what you will do with respect to when inventory physical count or physical inventory counting is impracticable? What you will do in that particular case? See, when something is not possible or impracticable, first of all, you need to evaluate whether that particular item is actually impracticable. Okay. So you need to understand whether that particular item which is there is actually impracticable, or it's, you know, it's just there is something because of which it cannot be performed. I'll tell you what. Let's say, for example, sorry. Yeah. Let's say attending physical count when not practicable. See, first of all, I need to understand whether it is not practicable or whether it's just because then, you know, it involves cost and it's difficult. So two things: difficult and not practicable or not feasible, basically. So first of all, you need to distinguish between both of them. So let's say, for example, SA 200 also, you know, talks about on this particular topic. SA 200 says that that is overall objective of the independent auditor, okay, and conduct of an audit in accordance with the standard of audits. It says specifically that the matter of difficulty, time, cost involved, it's not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative or to be satisfied with the audit evidence that is less than pervasive. Means if you say, okay, no, if I go to the count, I will incur some additional cost, or it will take a lot of time, or, you know, it is difficult, then that is not impracticable. Impracticable is a situation when you cannot do, you don't have any other option, or you cannot perform that particular procedure because of XYZ reason, you are stuck. That is impracticable. Okay. So in case when it is possible, but it is a matter of time, difficulty, or cost involved, and there is no any other alternative audit procedure, plus the evidence that you will get from other audit procedures, let's say, for example, if there are some, let's say if there are some, but the amount of evidence you will get is less than persuasive evidence that you require to express your opinion. Okay, so I need this much evidence, but I'm getting this much evidence. Then that is, you know, then there is no point of performing that audit procedure and skipping the audit procedure from where I can get this much audit evidence. Okay, so that's the SA 200 which is saying that. So in that case, what you need to do is you need to first evaluate whether it's difficult or it's impracticable. If it is difficult, then why you are like, you know, we are not required to skip any audit procedures just because it is involving difficulty, time, and cost. But when it is impracticable, okay, So first of all, we need to discuss the alternate audit procedures. What alternate audit procedures we can do in that particular time. And still, if even after alternate audit procedures, we are not able to obtain, okay, sufficient and appropriate audit evidence regarding the existence and condition of the inventory, then in such cases, modification to the auditor's opinion can be considered. Okay. And auditor is required to modify the opinion in audit report as it is the limitation on scope. So first understand whether difficult or impracticable. If difficult, cannot skip that, you can say, audit procedure, and especially when there are no alternative or audit evidence obtained from alternative audit procedure is less than persuasive evidence that we require. Persuasive evidence that we require. Okay. Then, if it is impracticable, then in that particular case, what we are required to do is alternate audit procedure. If alternate audit procedure not possible, then consider modification. Okay. So that is something we can do. I hope I am clear. I hope I am clear. Any doubts with respect to this? Very good question and important one, because it's, involves the concept of SA 200 plus SA 501. One more thing I just want to highlight for you guys: whenever you quote any standard in your answer, like SA 501, SA 705, SA 200, please quote the name also of that particular standard. Okay, please quote the full name of the standard that is there along with the number. Okay, that will help the answer reader to understand which particular standard you are talking about. So it will enhance your what you can say answer also. Okay, let's take up one more question. Okay. GHK Associates, chartered accountant, conducting the audit of PSB Limited, a listed company for the year ended 31/3/2020, is concerned with the representation and presentation and the disclosure of the segment information. So this is pertaining to the segment information included in the company's annual report. GHK Associate wants to ensure that the method adopted by the management for determining segment information resulted in the disclosure is in accordance with the applicable financial reporting framework. Guide GHK and Associate with examples of matter that may be relevant when obtaining an understanding of the method used by the management with reference to the relevant standard on auditing. So basically, what you are required to do is you need to give example of the matters that may be relevant when obtaining an understanding. So when you are understanding the method that is used by the management with respect to the segment disclosure, okay, so what things you will check when it comes to the segment disclosure to understand the method adopted by management. Let's say management is doing XYZ. So which XYZ you will review so that you can understand the method of the management. We discussed this one. I discussed this one in detail. Trust me. Come on, guys, try. I discussed this particular, in detail. Trust me. We discussed particular these example of matters. Come on, guys. Pretty easy. Trust me. Absolutely correct, Shailendra. Absolutely correct. Yes. So examples of matters are nothing but that we discussed, okay, earlier. If you see examples of matter, that is nothing but this one. Remember, like I was talking about sales, operating expense, margin, the different items that are there that we can go through to understand the method that has been adopted by the management. Okay, let us see the answer. Give me a minute. Yeah. So the auditors GHK Associate wanted to ensure and obtain sufficient and appropriate audit evidence regarding the presentation and disclosure of segment information in accordance with the applicable financial reporting framework by obtaining understanding of the method used by the management in determining segment information. SA 501 guide in terms of this regard. As per SA 501, audit evidence specific consideration for selected items. Examples of matter that may be relevant when obtaining an understanding of the method used by the management in determining segment information and whether such methods are likely to result in disclosure in accordance with the applicable financial reporting framework include sales, transfer, charges between segments, elimination of inter-segment amounts, comparison with budgets and expected results. For example, operating profit as the percentage of sale, allocation of assets and cost amount segments, consistency with prior period and adequacy of the disclosures with respect to the inconsistencies. So these are the method like examples of matters that can be relevant when understanding the method that is adopted by the management. Clear? Any doubt? Okay. Any doubt? Okay. If no further doubts, what I can do is we can move to the next particular essay for today. Okay. So the next essay for today is essay 505, external confirmations. Very good essay, and I'll not take that much time on this particular one, but rather than I will be I'll try to involve and go more practical on this particular essay. But wait, we have one question. What is allocation of asset? See, in previous example, like segment allocation, segment reporting, allocation of asset means, for example, you have a manufacturing line for manufacturing of car. How can you bifurcate a particular asset? Let's say, for example, the machinery is there. Okay, machinery which paints the car. Now, how will you say this is only for a sedan, this is for hatchback, this is for SUV? How can you bifurcate that particular machinery to one segment? It's not. Okay. So that's why there are methods which are used for the allocation of assets to all the segments. Based on, it can be number of units, the amount taken to, on that particular machinery. Let's say, for example, there is assembly line. You can have a different assembly line for each type of car. But let's say paint shop, you might be having a common paint shop. So you can see, okay, how much of the time a particular car spends in a paint shop, or how much number of units we produce. Or some people may go with number of unit into the number of minutes. So total amount, that is total minutes during the year that has been spent by that particular unit in a particular paint shop or like that. So on the some basis, they do the allocation. And those allocations and then are verified by the auditor, whether those allocations are on appropriate lines or not. Let's say, for example, depreciation on such machinery. How will you allocate that depreciation? The same way you allocate the fixed asset, you will allocate the depreciation. So allocation of assets or allocation of expenses is at times will involve calculation or assumptions. Any doubt? Okay. If no further doubts, then let us proceed forward to essay 505. Okay. Essay 505, very important essay. Okay. It talks about the external confirmation. Now, as I said, each and every essay has a scope and objective. So this scope of this particular essay deals with the external confirmation procedures. So it talks about the external confirmation procedures. Use of, sorry, use of external confirmation procedures. Okay. So that is the scope. So whenever you will use external confirmation procedures, you need to comply with this particular standard. Now, what is an objective? The objective is simple for this particular essay is to design such external confirmation procedures, or to when using external confirmation procedures, then at that particular point in time to design and perform such procedures that we can obtain sufficient and appropriate or reliable and relevant audit evidence. Okay, so to design and to perform external confirmation procedures to obtain relevant and reliable audit evidence. That's an objective. So we need to perform procedures in such a way. Okay. Now, there are certain essays which already emphasize the importance of this particular standard. Okay, just to name it, essay 330. Essay 330 discusses auditor's responsibility, to design the overall overall audit response, to address the assessed risk, which includes, this audit confirmation process also. So essay 330 also focuses on, that for such a certain kind of, balances, items, or expenses, or something like that, we can use external confirmation procedures. Then essay 240. Essay 240 talks about, auditor may design confirmation requests to obtain more corroborative information to respond to the, assessed risk of material misstatement due to fraud. Then the third is essay 500. Essay 500. Essay 500 talks about your audit evidence. Okay, it talks about obtaining external confirmations. It's a more good source of evidence compared to the internal one. Okay, so external confirmations increase the assurance of the auditor, and evidence obtained from external confirmation are more persuasive than compared to the internal one. So these three standards already emphasize the role of external confirmation. Now, before we proceed further, we need to understand few things, like what is a positive confirmation, what is a negative confirmation. Okay, so positive confirmation. So positive confirmation is when you get a direct written response from a third party by accepting or denying particular thing. So we get a direct response from third party. Let's say, for example, you send an account confirmation, account receivable confirmation, you got the confirmation back stating that, okay, we agree with this balance, or this is the balance that we also have. That's a positive confirmation. You are getting a reply from a third party. But when I talk about a negative confirmation, okay, you get reply or direct response is received only when there is disagreement. You will say in your letter that, okay, if you do not agree with this balance, then please revert us back within 7 days. So if you do not get a revert, means everything is fine. So that is the difference between positive and negative. In positive confirmation, I need response. In negative, When I don't get the response, I mean, oh, it's everything is okay. Okay. Now, when using external confirmations, okay, we need to determine few things. We need to understand few things. First of all, we need to, as an auditor, we need to exercise the control over the confirmation process. So maintain control over the external confirmation process. Now, how will you maintain control? You can maintain control over the external confirmation process by, okay, determining the information that is required to be confirmed or requested. Means you will decide for which information you need external confirmation. You will select appropriate confirming party. Okay, let's say top 10 vendors, top 10 customers, but those top 10 you will select. You will decide whether top 5, top 10, top 20, whatever. You will design the confirmation request. Okay, what amounts are required to be involved, what should be the language, how a response should be received in for the such confirmation, everything. So you will design the confirmation request, including determining that the requests are properly addressed and contain written information for the responses, and that they are directly sent back to the auditor. You will send the request, including follow-up request. Okay, so you will send the request, including follow-up request to the customer, or to the that particular party confirming the balance. You will not leave this upon the management. Trust me, you will not leave the manager upon this on the sending the external confirmation upon the management, because if you will do, then it will not be taken as a reliable audit evidence. Now, what if the management refuses to allow the auditor to send the external confirmations? If, let's say, for example, management doesn't allow you, you are not allowed to send the external confirmations. Then what you will do? If management refuses, okay, on management's refusal, what you will do is, first of all, you will understand the reason, or you will inquire the reason for refusal, and you will seek other audit evidence to verify the validity and reasonableness of the reason provided. Let's say, for example, management says, no, you cannot send external confirmation because that particular party no longer exists, or that person has died, or that person has, was absconding, he's not available, or XYZ reason, or the relations are not good with that particular person. So you will gather additional audit evidence to validate that particular response. Okay, you will get additional, you will try to get additional audit evidence to validate that response. For example, I'll say for example, if they are saying that the person has become bankrupt, you can go and check whether that person is actually bankrupt. Any such filing or news is there, or any such disclosure already made by the person, you can check it. Sorry. Okay. Then what you will next do is you will evaluate the implications of management's refusal on the auditor's assessment, okay, on my assessment of risk of material misstatement, including risk of fraud, and I will understand or evaluate the nature, timing, and extent of the audit procedures, of the other audit procedures that I'm required to perform. So first of all, I will understand the implication of not getting the confirmations, plus how much and how many other audit procedures I need to perform. I will evaluate that. So evaluate the implications on the assessment of risk of material misstatement, plus the nature, timing, and the nature, timing, and extent of the audit procedures that you are required to perform, and that might require revision. Then you need to perform alternate audit procedures to gather more audit evidence. Okay. Now, if in the case, if the refusal is unreasonable, and you are not able to get the audit evidence, okay, then in that case, what you can do is you can communicate the impact on the audit opinion to the those charged with governance, and then you can also consider, modifying your audit report. But again, that is once you have already communicated with the those charged with governance, then you can consider for that also. Any doubt till now? Any doubt? Okay. Then I'll talk about the reliability of the external confirmation. What is the reliability when you get a confirmation? Okay. Or when you identify some doubts with respect to the confirmation. Let's say, for example, if auditor identifies any issue on reliability, then we are required to obtain further evidence to resolve the same, to resolve the reliability issue. For example, I'll give you a good and live example that let's say you asked management, please provide me the details of this particular trade receivable. Let's say there was a trade receivable, Mr. A. You asked for his contact details. Okay. Now, when you ask for his contact details, like, give me his contact details, like, I want to send, let's say, for example, confirmation to this particular person. Okay. Then what will happen is he may provide you a particular, what you can say, address plus particular contact detail, email ID, all such things. He will provide you all that thing. Okay. Now, what will happen is when he will provide you the detail, when he will provide you the particular contact details of person, it may happen that you have some doubt with respect to that address. Okay. Let's say, for example, he gives you address of the vendor or the customer, in this case, let's say Mr. A, the customer, okay, usually purchases the goods from your company. Your company is in Mumbai. But the address of Mr. A is of, let's say, for example, Assam. Okay. So address has been given of Assam, but the company is in Mumbai or Delhi. So you may have a doubt, okay, how the person is in Assam, but if he is purchasing goods from Mumbai or Delhi, if he has a plus, he has a GST number of Delhi or Maharashtra. Okay, so you can corroborate the evidence with the GST number, whether he has a GST number from here or GST number from Assam or what GST number he has. And then you can go to the records and get the address of that particular person, either from the GST department or from some other sources. You can validate the address, and once you validate the address, and if you are satisfied, you can send on this address, or if you identified a new address, you can send on that particular new address. Both are available. Okay. Sometimes we go and we try to get from IT records, income tax records, or you can go from MCA data. So you try to corroborate the evidence, the address from different sources. Okay. And then whatever the final address would be, you will send on that particular final address. So when the audit evidence or you have any doubt with respect to the reliability, then in that case, you need to gather more audit evidence to resolve the same. And even after further audit evidence, if the auditor decides that the response received is not reliable, Then consider the impact of risk of material misstatement due to fraud. Okay, let's say for example, you send the response on this particular address, let's say address which was there in the GST or IT or MCA, but you got back a response from Assam address. Then you need to think about, I never sent to the Assam address. It was at the first instance, it was appearing incorrect. Then how we received the confirmation from the that particular address? Or I'll give you one example, one live example. Okay, what happened that while performing the audit procedures, we went to the management and we informed the management that we will be sending the confirmations to top 20 customers. Okay, now management said fine, send the top 20 customers confirmation, we allow you. Fever said okay, fine. Then later on, due to some change in the procedure, audit procedure, we decided instead of sending to top 20, let's shift to the top 50. And we rolled out top 15 accounts receivable confirmations. Fine. However, the file left out. Okay. We received a response from one of them. So we received a response from the file to whom we did never send a confirmation. But this top 15 that we are shifting from 15 to 20, that was not intimated to management. Management was not aware. So someone from the management sent a response which was included in this top 5. They thought we might have already rolled out the confirmation. And to give us the response, we got a response from that particular mail ID. Okay, we confirmed the balance. But we, in the first instance, or from that particular address, we got the confirmation. But at the first instance, we never sent that confirmation. So even before, even like they might have thought, okay, we are anyway, we are going to send, and they might have already rolled out. So before even we get back a response, before even we send a confirmation, we got the response. So by this way, we identified there is something wrong with that account receivable, and it happened to be a fake account receivable. So it was a case of fraud only, but this is how we identified one of the instances of fraud. Okay, so by this way, you can consider the impact of fraud when you don't have reliability over the external confirmation or the confirmation that you have received. See, you can use various sources for the public to get the public information. It's not like that, you need to use one source. You can use X number of sources. Even I can go and Google and check whether the address is correct or not. Okay. At times, some of, we also at times adopt, sending a person onto that particular address, if that is feasible. Let's say, for example, there is an address of same city. I may also ask a person, okay, while coming to the office, go to that particular address and check whether actually there is any office of that customer on that place or not. So there are multiple ways you can adopt anyone. Manini, can you explain or provide more information, example with respect to which thing, to which particular area you need some more examples? Okay. Okay. Now, okay. Then moving to the next person, the next area is receiving the response and considering its impact. Now we saw when we received an response, but we are that is there is a reliability issue. What to do? If we have not received the response, then we need to perform the alternate audit procedures. Okay, and accordingly we need to obtain. We need to consider the impact on our audit report when we have not received the response. But what if when the response of confirmation is received, and like how to evaluate that particular response? Okay, see, at times it may happen that when we are sending the confirmation, it is necessary to obtain a response. Okay, so let's say for example, I'll say bank confirmations. I cannot write to the bank, okay, please revert me if there is any observation or if there is any disagreement. So at times I need positive confirmation, or I am required to send the positive confirmations. I cannot only stick to a negative confirmation. So in all those circumstances, a positive confirmation or the confirmation response is necessary. Okay. So for that particular thing, I need to send positive confirmation only. Okay. If there is a fraud risk, if there is a risk of collusion, in those cases, positive confirmation is more good compared to the negative confirmation. Okay. Now, if I do not receive a positive confirmation, then there are chances that I will not get any other audit evidence, the audit evidence that I will receive might not be that much persuasive. Okay, so in that case, that might not that much be persuasive, and in that case, it is not sufficient. It might not be sufficient for us. So we need to understand the underlying comfort that we are required or that we are trying to get by sending the confirmation. So if positive confirmation is necessary to obtain, then alternate procedure will not be sufficient if no response is received. Okay. So when I talk about, let's say, bank confirmation, I need positive confirmation. Is there any alternate procedures that you can perform and you can get that much sufficient and appropriate audit evidence? I think no. Bank confirmation is must and necessary. Okay. So in order to corroborate, let's say, for example, if you want to corroborate anything which is asserted by the management, in that case, again, you will go for a positive confirmation. Now, in that case, you need to decide, like whether that particular positive confirmation or no response that we have received, or the response that we have received, let's say it's a disagreement or something like that, means there is something issue. Then we need to consider the implication of that particular no response or different response or disagreement on our audit opinion. Now, if any exceptions has been received, then we need to investigate and obtain further evidence for that exception. Now, what are exceptions? Exception is something that, let's say, for example, you were expecting that bank will confirm the balance of rupees 1,000, which is in the books. But bank confirmed that the balance is actually 100 rupees, not 1,000 rupees. Then that's an exception. So you need to understand what is an exception, whether it's a misstatement or it's something, not a misstatement. So you need to understand from that point of view. Now, there's a difference between exception or misstatement, basically. Okay. When I talk about an exception, exception indicates difference between information requested to be confirmed, which is there in the entity records, and information that is provided by the confirming party. So, for example, bank confirmed, let's say rupees 500 as balance, and books were showing balance, book balance was, let's say, showing 700. Okay, that's an exception. Now, whether this exception is a misstatement or not, that we need to understand. Okay. So, to understand whether an exception is a misstatement, we need to understand that why there is a difference. So, you need to understand the reason of difference between both. Okay. Let's say, for example, this can be because of the timing difference, reconciliations, timing difference, reconciling items, can be anything. Okay. Some, let's say, charges by bank, which were not intimated to the customer earlier, something like that. So there can be a lot of things, but, or there can be a clerical error or XYZ. Okay. Now you need to understand whether this exception is a misstatement or not. Okay. By evaluating that particular exception. So exceptions are not misstatement, but after evaluation, you may decide that this exception is a misstatement. Okay. So you need to understand and investigate further in that particular case. Now the question comes is, if like we were talking about positive confirmation, then when we are required to send the negative confirmation. See, negative confirmations, as I've told you, they are less persuasive. Okay, they provide less persuasive audit evidence than positive. So negative confirmation should only be rolled out when you have obtained other information or other audit evidence. Okay, you have already obtained other audit evidence or audit or information through other audit procedures. Okay, so means that is not the sole audit procedure to gather the audit evidence. When the risk of material misstatement is low for that particular balance, assertion, or item, there's a very low exception rate, means usually you don't get differences in your confirmation. There are the control reliance is high and sufficient and appropriate audit evidence has already been obtained from test of controls. The population consists of large items, small value items, large but small value. Okay. And the auditor is not available, not aware of any circumstance or condition that would cause the recipient to disregard the negative confirmation. Or, let's say, for example, auditor is not available or not aware basically of any such information that if I send a confirmation, that the third party will disregard the confirmation and will not send a response to me. Means auditor is confirm or sure that when I will send a confirmation, the person will consider, will read it, and will accordingly respond it. Okay, so the chance of ignorance is very less. Basically, chance of ignorance or non-consideration of the confirmation is less compared to the other areas. So if these conditions are there, then only we can go for negative confirmation. Otherwise, we cannot. So that was with respect to the evaluation of the confirmations. Any doubt? Okay, so there are questions. How negative confirmation is useful? So if these conditions are there, then only you should use negative confirmation, otherwise not. Otherwise, always stick to the positive confirmation. Sometimes banks are also involved in manipulating information. Then what auditor should do? You cannot actually, stop or you cannot detect fraud 100%. First of all, understand that our responsibility is to provide reasonable assurance, not the absolute assurance. We are not the fraud investigators. We are performing audit. At a point in time, we have to rely upon the, certain things. Let's say, for example, external confirmations. Once you receive a confirmation from a bank, I cannot go and question on the bank. What will happen? Let's say, for example, if you have received a confirmation from bank. Now, if you create a question, then what you need to do is you need to go to the bank, you need to test their controls, you need to perform their audit, and then you need to get an assurance, and then you will get an assurance for your confirmation. Very long process, very long, and bank will not allow us to go and audit their books of account just because I want an assurance over my confirmation. No. So in that case, sometimes we have to accept the risks that is involved in that particular area till the time it is manageable or it's below the below the acceptable level. So there should be a balance between the reliability and questioning. As I said, it's even from the start, SA 200 also says that that skepticism, that we are required to be skeptical while performing the audit, but that does not mean that you should question each and everything and you become a fraud investigator. Any further doubt? Okay. If no further doubts, then what we can do is we can take a quick break. And after the break, what we can do is we can solve some questions for this particular standard, and then we'll move to the next standard. Okay. Let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue with few questions, okay, and then we can move forward. Also, what I'll suggest is you can also bring your questions. If you have any question, any doubt, you can ask me, or you can also have a request or something like that. Okay, we want to understand this question from this past paper or this particular RTP or something like that. I'll be also looking into that, and I'll be, if time permits, then I'll also try to answer those questions or explain those. Okay, so let's say there was one question, very good question for understanding. Okay, the audit team obtained the following results from the trade receivable circulation of Oak Company for the year ended 31st March 2018. Okay, balance as per sales ledger, balance as per confirmation of MNOPR. So there was a M company, no difference. N company, there was a difference. O company, there was a difference. P company, no difference. R company, we did not receive a reply. So there are some specific comments. Invoice raised on 20th March 2018. Okay. Payment made on 30th March 2018. Okay. Then for this particular difference, a balance of 45,000 is currently being disputed. Fine. Okay. There is nothing, NA, and nothing over here. Now, based on this, okay, I would like to understand from you guys, okay, which particular case over here you will consider as an okay, as an observation or exception or misstatement. So which are the cases where you need further investigation and further audit procedures? Which are the parties where you need further investigation and further audit procedures from this one? Any doubt? Any answers? Okay. Good, Manini. Okay. So, okay, good. Okay. Okay. So, where we will investigate or where we will, consider an exception. Number one, M. Is there any difference between here? Answer is no. But there was an invoice which was raised on 20th March. So, if there was an invoice which was raised on 20th of March, then why there is no difference? Okay, why there is no difference? Okay, let's say it's assumed that that has been accounted for. So fine. Then payment made on 30th March 2018. Okay, so there is a difference between both of them. Now in this case, what will happen is, if there is a difference between both of them and we have an appropriate reason why there's a, because of this is a timing issue, payment made but not accounted, something like that. So that is also fine. We can have some detail more, and that is can be closed. Oh, there is a difference between both of them, but there is a only dispute of 45,000, but here it is more than 45,000. So there is something more which is not captured here. And hence this requires further investigation. P, everything is fine. R, we haven't received any reply. Means that also will require further investigation or further any additional evidence. So O and R are the one where we require further evidence. N is a case of timing difference. Okay. And it should be, you know, we can agree this particular thing, this particular balance. Okay. Let's say because of pre-timing, because of a timing difference, payment was made on 31st March. If we check balance as on 30th April, let's say 34/20/2018, we may get this balance because by that time payment might have come. So we can still, you know, accept this one, this one, this one, but we cannot accept O and R. We need further audit procedures for those. Clear? O and R are the one where we need further audit procedures. Okay. Okay. Now let's see one more question to this. Just a minute. During the audit of Big Balance Limited, the audit team decided to send external confirmation for validating the bank balances of PF of the company. Okay. As per SA 505, the audit team designed and sent the confirmation. The responses received and the materiality of the balance and balance as per book are mentioned below. Okay. AA bank, AB bank, AC bank. Balance, material balance, non-material, material balance. Books as per amount as per books 75, no confirmation received. Amount as per books 25,000 confirmation received. Amount as per books 70 lakh, confirmation received 68 lakh. Discurrence of exception 2 lakh rupees. Checks deposited but not clear to the tune of rupees 1,90,000. Rest is unidentifiable. Now, the audit team was of the view that the bank balances positive confirmation request response is necessary to obtain sufficient and appropriate audit evidence. In the light of SA 505, kindly select appropriate option from the below regarding the evaluation of the misstatement. If the auditor has determined that the response to a negative confirmation request is necessary to obtain sufficient and appropriate audit evidence, alternate audit procedures will not provide the audit evidence that the auditor requires. Moreover, the auditor is required to evaluate the exceptions along with their reasons. In the current case, auditor should consider necessary performing alternate audit procedures with respect to AA bank balance and should ignore the exception in AC bank balance as its anomaly. If the auditor has determined that the response to a positive confirmation request is necessary to obtain sufficient and appropriate audit evidence, then alternate audit procedure will not provide the audit evidence the auditor require. Moreover, the auditor is required to evaluate the exceptions and reason them. In current case, the auditor should modify the audit opinion with respect to AA bank and should consider the impact of exception of AC bank individually or combined with other exception based on the materiality. Third option, if the auditor has determined that the response to a positive confirmation request is necessary to obtain appropriate audit evidence, then alternate audit procedure will not provide audit evidence the auditor requires. In the current case, AA and AC banks are not material balance and an auditor should not include these exceptions in the list of uncorrected misstatement and have no material effect on audit opinion. The last one, same if the auditor determines that the positive response to a positive confirmation is necessary to obtain, and then the alternate procedures will not provide audit evidence. Then in the current case, AA and AC banks are not material balance, and auditors should consider to obtain management representation regarding the accuracy and completeness of the bank balance, which will be sufficient and appropriate as an audit evidence. So what is the correct option in this case? A, B, C, D. The question was, there was an exception in AC bank and no reply has been received from AA bank. Okay. So how will you deal with this situation? What is the correct option? Come on, guys. Pretty easy. What is the correct option over here? Come on, guys. Pretty easy. Okay, Manini. Good, Shailendra. Okay, so see, let's evaluate the answers. Now, first of all, we need to understand what is an exception and what is can be taken as an issue. Now here we have not received the confirmation for AB bank. Okay, and for AC bank there is an exception of 2 lakh, out of which we have received the reason of that checks are not deposited to the tune of 190. So the remaining amount for which the further investigation is required is only rupees 10,000. Okay. Now, what we need to do is, see, bank is one of such area where we need response, okay, and positive confirmation, response of a positive confirmation. Now, reason because there are no any alternate procedures, audit procedures that can give me that much level of audit evidence which I require from the audit procedures. Okay. So in order to obtain sufficient and appropriate audit evidence, I need the response of the positive confirmation. In case when I do not receive any response, I need to consider the impact on my opinion. Okay. So the first one says that auditors should consider performing alternate procedures with respect to AA bank balance. But again, as I said, AA bank balance, I have not received the confirmation. It will not give me the comfort. Alternate audit procedures will not provide sufficient and appropriate audit evidence. Hence, this is incorrect. Okay. Let's go to the B. B says that I should consider, the impact on my opinion. So consider modifying the audit opinion with respect to the AA bank balance and the impact of exception of AC bank balance individually or combined with other exceptions based on materiality. So I need to consider, okay, what is the other exception of rupees 10,000? Okay, what is the other exceptions over and above, along means, from other testing of bank and cash balances over and above 10,000. Okay, and what is the total exception that I'm receiving, that I need to consider, compare with materiality. If I can compare that amount with materiality, I will come to know whether I need to, whether that impact my opinion or not, or whether I need to modify my opinion or not. So I need to consider the difference of 10,000 with respect to other exceptions in total. Okay, I'll take other exceptions, I'll take 10,000, I'll combine it, all the exceptions, and I'll take what is the total amount of exceptions in cash and bank balance and at the overall financial statement level, and then I'll decide what to do with that. So this appears to be correct. Okay, let's move to the next one and we identify why those are wrong. It says that AA and AC balances are not material itself. I have said here that they are material balance. So that's why it's incorrect. Again, here says A and AC bank balance are not material bank balances. That's why C and D are incorrect. So the correct option is option B. I hope I'm clear. Any doubt, guys? With respect to external confirmation, any doubt? Okay. If no further doubts, what I suggest is let's move to the next standard for today. Okay. And just a minute. Okay. So the next standard that I want to cover today is SA 510, initial audit engagements. Okay. Now, what is this particular standard talks about? As the name suggests, okay, as the name suggests of this particular standard, initial audit engagement. So, or opening balances means initial audit engagement is something, when you start your audit engagement for the first time, or when you are, starting the audit for the first time, at that point in time, we talk about initial audit engagement. Okay. Now, what is the scope of this particular standard? As I said, initial audit engagement talks about opening balances, regarding audit process, regarding opening balances when you conduct an audit for the first time, and when you need to verify the initial audit engagement. Okay. Now, the thing is that when I am conducting an audit for the first time, or when I talk about initial audit engagement, okay, then in that case, I need to consider there are a lot many things with respect to the opening balances. See, whenever I'm conducting an audit, I am giving an assurance on the closing balance plus the transaction that has happened during the year. But at times we forget about the opening balance, because opening plus transaction will give you the closing. And what if the opening balance itself were either not audited or were not audited by me? Two things. Either the opening balances were not audited, or let's say, for example, they were audited but were not audited by me. So in that case, what is required to be done? That this particular standard will tell you. So when I talk about initial audit engagement is an engagement okay, where the financial statements of the prior period were either not audited or were audited by the predecessor auditor, or were not audited by me, by some other auditor. So that's an initial engagement. Okay, means for the first time you are taking that particular engagement, audit engagement, initial audit engagement. For the first time you are taking that audit engagement. Okay, fine. That is the initial audit engagement. Now, what is the opening balances? Opening balances, that's the balance that exists at the beginning of the period of that particular class of transaction, item, financial statement, line item, whatever it is. Okay, so the balance that is existing at the beginning of the period are the opening balances. Now, opening balances are usually carry forward of the closing balances of the prior period. Okay, and accordingly they are considered. Okay, now when I talk about audit of opening balances or consideration for opening balances, okay, for an initial audit engagement, because in rest of the audit engagement you are the predecessor auditor and you only perform the audit, so you have the comfort of the closing balance. Now opening balance is something that the carry forward of the closing balance only, so that's why you have comfort over the opening balance, and accordingly you just need to verify, okay, this was the closing, this is the opening, appropriate carry forward has been done, matter closed. But when the audit is for the first time or you are auditing for the first time, then what you can do to gather the sufficient and appropriate audit evidence to ensure that the opening balances are appropriate and fine and correct. Okay, so what you can do? So you can read, auditor can or shall read the latest financial statements, okay, most recent or latest financial statement, okay, plus audit report if available. Means if it is a not the first time of audit, but first time audit for me, then there might be some predecessor's auditor report. That report we can read it. Okay, then we need to obtain, as an auditor, we need to obtain sufficient and appropriate audit evidence about whether the opening balance contain misstatement that materially affect the current year's period of financial statement. Now, what happens is, let's say for example, fixed assets, let's say FY20 or 1/4/2020, there was a balance of fixed asset, let's say 3,000 rupees opening balance. Okay, during the year there was an addition of rupees, let's say 1,000 another. Okay, so the closing balance 2,000, then depreciation at the rate 10%, hypothetical example 200 rupees, net closing balance or net book value 1,800, carry forward it to the next year. This is on 31st 3/21. Now again I'll have 1/4/21 opening balance, the same opening balance 1,800. Here I am appointed as an auditor. Okay, here there was some previous auditor. Now as per the previous auditor, As per the previous auditor, there was a misstatement. There was a misstatement in addition. So instead of 1000, the addition should have been rupees 700. So there was a misstatement of rupees 300, which was not rectified. And this was contained in audit report as modification. Now in the current year, let's say for example, there is no addition. Okay. In the current year, let's say example addition 0. My closing balance before debt will be 1800. I will apply depreciation at the rate 10%, 180. Okay. Then rest of the amount I will receive as a closing balance. That will be 1800 minus 180. That comes to 1620. Net book value, closing balance. Now you tell me that this closing balance of 1620 is perfectly fine, or is there any misstatement? Is there any misstatement in balance of 1620? What do you think? This balance of 1620, does it contain any misstatement? Very important to understand. Does this balance of 1620 contain any misstatement? Come on, guys. Correct. Absolutely correct, Shalendra. Correct, Manini. Because there was a misstatement in the opening balance, because there was a misstatement in the opening balance, because of that, there is a misstatement in the closing balance. Now, this 1800 was misstated. Why? Because previous year closing balance was misstated. Simple. If previous year closing balance was misstated, means there is a misstatement in the current year opening balance, because the same has been carried forward. And as a result, there is a misstatement in the current year's closing balance. Okay. So there is an, you can say, recurring misstatement. The misstatement was in once it was there in the previous year, but it still has an effect. Okay. It still has an effect in the current year. So from here, particularly to here. Sorry. From here, particularly to here, it passed on the misstatement. And because of which, the closing balance is not appropriately stated. So what I need to do, I'm required not only to consider the misstatement of the current year, okay, I am required, to consider the misstatement of previous year also. So based on this example, basically this particular example, I am required as an auditor, basically. Auditor is required to consider the misstatement of previous year and its impact on current year. It is not necessary that the impact should be of the current year only. A misstatement from the previous year could have an impact in the current year too. Understood? Any doubt? Okay. So a misstatement from the previous year can have an impact on to current year also. Keep it here. Okay. So just a minute. Okay. So when I'm determining whether is there any misstatement in the opening balances, I need to consider the impact of that particular misstatement onto my current year. Okay. And for that, I need to obtain sufficient and appropriate audit evidence. Sufficient and appropriate audit evidence with respect to that misstatement, so that I can ensure that whether it is materially affecting my balance or it is not. So here I need to understand, okay, whatever misstatement is there in the fixed asset. Let's say, for example, the misstatement in the fixed asset was 300 rupees. Whether 300 is material for me, whether it is impacting, like how much it is impacting to my current year balances, all those things I need to look into that. Then once I look into the impact and the materiality, okay, of the misstatement, then I need to evaluate whether what basically how much impact is this having on the current year's balance, and what further audit procedures I need to perform to understand or to gather more audit evidence about that. Any doubt till now? Any doubt? How and how much critical the misstatement of the previous period or misstatement containing in initial opening balances can impact my closing balances? That's why it's very important. That's why the opening balances or audit of opening balances is very important. Now, not only that, not only sufficient and appropriate audit evidence pertaining to my opening balance, but over and above that, what I need is I need to understand certain few things about the opening balances. Okay. And that is, I'll write it down here. Now, auditor, just a minute. Basically, I think there is some glitch. Just give me a minute. Just give me a minute. I think there is some glitch going on. Sorry for the technical issue. Okay, yeah. So, along with the sufficient and appropriate audit evidence, what auditor is required to do is auditor is required to understand whether the closing balances of the previous year has been brought forwarded correctly. So, for example, in our example, 1800 was the previous year balance. What if someone, by mistake brought it as in 1000 or 18,000 or something like that? So you need to verify few things with respect to the opening balances. One, the misstatement in previous period. Second, you need to understand whether that has been brought forward appropriately. Third, you need to see whether the accounting policies that were adopted in last year or which are there for the opening balances have been same adopted in current year also. So determine I have listed down all the points over here, okay, for the ease, that determine whether the prior period closing balance have been correctly brought forwarded. Okay, then determine whether the opening balances reflect appropriate accounting policies, very important. Then we need to perform procedures on opening balances to ensure that the opening balance are correct. Opening balance are do not contain any misstatement. Okay, then if current year financial statement are misstated due to misstatement in the opening balance, then we need to communicate the same to the management or those charged with governance. Okay, we need to communicate to them, okay, there is an issue in the opening balance and you need to rectify. We need to obtain sufficient and appropriate audit evidence with respect to consistency of accounting policies. Then whether accounting policies are applied consistently or not. We need to also refer to the previous year auditor's report and financial statement to understand. Okay, if there is any modification in the preceding auditor report, then we need to consider the impact of such modification on the current year's financial. So all these things we are required to do with respect to the opening balances. Okay. Also, we are required, to evaluate the impact of the opening balances. Any misstatement is there. Okay. And if we are not able to obtain sufficient and appropriate audit evidence regarding the opening balances, okay, or if the balance contain misstatement or not properly presented or disclosed, okay, if the accounting policies are not consistently applied in relation to the opening balances, or if there is any modification in the previous year audit report which is relevant and material to the current year financial statement, then I need to either modify my opinion or I need to either issue a disclaimer of opinion. Okay, so that is something I need to do with respect to the opening balances. So I just summarize here also. Auditor report plus I need to check previous year modifications, accounting policies on opening balances, brought forward and carry forward appropriately. Okay, so these are certain areas where I need to look for an from a point of view of opening balance. Any doubt? Okay, now very good question. What if there is no base statement in the previous year audit report? Do I need to check each and every ledger? If there is no misstatement in the previous audit report, then you will check whether each ledger's balance has been appropriately carry forwarded or not. Now, there is one more area that we need to understand here is, let's say, for example, this is the first time of audit. Okay. How will you ensure that, the balance that is appearing as the opening balance is correct? This is the first time audit. Let's say, for example, first time audit is there. Sorry. How will you ensure opening balance in such scenario? There was no audit report. There is nothing available. The trial balance has been given by the management. So those are the opening balances are management certified. So management has certified these opening balances and they have given to you. How will you ensure that the opening balances are correct? Any idea? Any answers on this? How will you ensure that the opening balances are correct when it's a first time audit? Opening balance has been certified by management. What you will do? Will you perform audit of the previous year? Will you go and will you perform the audit of previous year? Correct, Manini? Okay. See, in that case, no need to perform audit of previous year. Okay. You need to, but auditor is required to gather sufficient and appropriate audit evidence for opening balance by okay, opening balance, and that too they can perform by performing procedures for the current year. I'll tell you how with some example. Let's say, for example, stock. Okay, stock is there. Cash and bank balance. AR. AP. What you can do is you can obtain inventory listing, count details. Okay, let's say, for example, last count was conducted on 30th May, not on 30th March. You can perform rollback procedures. Let's say, for example, cash and bank. What you can do is you can ask for opening balance confirmation from bank, or at times bank provide in their confirmation itself, okay, what was the opening, debits plus credits, debit plus credit and whatever it is there, and the closing balance. Okay, so at times bank provide this kind of confirmation. You can verify from there the opening balance. Then for AP and AR, again you can ask statement from AP and AR. Okay, account statements, and account statement will contain opening plus movement and will give you closing balance. So by this way, you can verify closing plus opening also. So that will depend upon type of underlying, the financial statement line item. And accordingly, you need to define the procedures for, let's say, stock, cash and bank, AR, that how you can gather sufficient and appropriate audit evidence even while performing the procedures for the current year. I will not go and verify the transactions of the previous year. I am required to have the comfort on the opening balance, not on the balance which was like, you're not on the transactions which were there earlier. Okay. So if I can get the comfort on the opening balance somehow by performing the additional procedures in the current year, then what's the harm? Any doubt with respect to opening balances? Now there is one question, that what if the misstatement is of 5 years ago? See, if misstatement was 5 years ago, then in the previous year, the auditor might have already considered that misstatement and the impact on financial statement. Like, let's say 5 years ago, there was a misstatement. In the fourth year, someone might have already considered it. And if that would have been material, then that would have been part of audit report. If part of audit report for the fourth year, then again, same exercise for the third, for the second, and for the last year also. In the last year, if there is a misstatement of 5-year-old, but that is material and still impacting your financial statement, then that will be part of your audit report. By seeing that the audit report of the last year, will come to know whether this misstatement is of 5 years old, which is still impacting. And if it is not that much material, then you can just consider the impact on the opinion, and accordingly you can also issue an unmodified opinion. And when it was issued, let's say for example, in the third year itself, it from modification it became to unmodified opinion because the impact was no longer material, then doesn't make any difference for you, because for you also it will be unmodified because the impact is no longer material. Any doubt? Yes, we can rely upon the previous year audit report also. So when audit report is available, yes, we can rely upon that. There is see, we are not required to perform additional audit procedures on the audit report. If there is an audit report, we can rely upon that audit report. No need to perform additional procedures to validate the balance of audit report. Yes, but we need to perform the additional procedures, or we need to perform the procedures to ensure that the balances in audit report has been appropriately carried forwarded by the management. It should not be the case, okay, in the audit report, cash and bank was, let's say for example, 50 lakh. But when they carry forwarded 40 lakh. We need to match the balance which were there in the audit report, and those balances should have been carry forwarded. But I'll not question on the balance of 50 lakh that is there in the audit report. Absolutely correct, Mani. This is the first step in their audit procedures, that first you verify your opening balances, okay, when there is an initial audit engagement, and then only you proceed further for the rest of the audit procedures. Reason, because till the time you do not have a comfort over the opening balance, you cannot have a comfort over the closing balance. Any doubt? Any doubts? Okay. If no further doubts, let us see some questions. Mr. K, the audit manager on ABC Limited audit, was assigned the task to frame the audit plan with respect to the opening balances. While deciding the matter that are necessary to determine the nature and extent of audit procedures necessary to obtain sufficient and appropriate audit evidence regarding the opening balance, he concluded that the nature of the account balances, classes of transaction and disclosure, and the risk of material misstatement in the current period's financial statement is not relevant. Means when he was conducting or he was obtaining sufficient and appropriate audit evidence regarding opening balances, okay, he concluded that current nature of the account balance, classes of the transactions, and disclosure and risk of material misstatement of the current year is not relevant. Okay, you as an engagement partner on the audit, kindly guide Mr. K with his understanding in light of SA 5010. So what are the options? The nature of the account balances, classes of transaction, and disclosure of the risk of material misstatement in the current year financial statement is relevant to determine the nature and extent of audit procedures. Current year balances, current year risk of material misstatement are not relevant for determining the nature of an extent of audit procedure for to obtain sufficient and appropriate audit evidence regarding opening balance. While deciding the matter that are necessary to determine the nature and extent of audit procedures regarding opening balances, Mr. K should focus only on the areas where there was a modification in the previous year audit report. Mr. K should focus on the matter already communicated to the management and those charged with governance for the purpose of determining the nature and extent of audit procedures necessary to obtain sufficient and appropriate audit evidence regarding opening balances. So what is the correct option over here? So what is the correct option? Come on, guys. What is the correct option here? Okay. Good, Manini. Okay, good, Shailendra. Come on, guys. What is the correct option over here? Okay, so let's understand now whether the account balance, nature of account balance, okay, whether the nature of account balance, classes of transaction, and disclosure and risk of material misstatement in current year financial statement is relevant from the point of view of opening balance. So answer is yes, they are relevant. Reason because the nature of account balance will help us to understand what type of audit procedures we need to perform to gather the sufficient and appropriate audit evidence for the opening balance. Same with the classes of transaction. The disclosure and the risk of material misstatement will also help you to understand the audit procedure you need to perform. For example, at a lot of places, you are required to provide the a whole you can say movement. What was the opening movement during the year closing at lot of place in the financial disclosure. Okay, now if the disclosure requires a movement, means it requires an opening balances. Even in the comparatives, you provide the opening balances. But let's say, for example, if there is a movement and if you need to give the comparative of that particular movement, means you need to give opening balance of not only the current period, but the opening balance of the previous period. So accordingly, it will help you to understand what audit procedures you need to perform. Disclosure, risk of material misstatement, account balances, and classes of transaction, all three are relevant to understand, okay, the audit procedures and the audit evidence that is required for the opening balance. So B, C, D are incorrect. A is correct because talk about is relevant. Now that should be irrespective whether there was any observation or communication to the management or not. It should be irrespective of that. So whether there was a modification in the previous year audit report or whether it was communicated or not doesn't make any difference. Clear? So the correct option is A, not B, not C, not D. So A is the correct option. I hope I'm clear. Any doubts? Okay, let me take up one more question. There are 2 points here. In an initial audit engagement, just a minute. Yeah. In an initial audit engagement, the auditor will have to satisfy about the sufficiency and appropriate net of the opening balances to ensure that they are free from material statement which may materially affect the current year financial statement laid down financial statement. Lay down the audit procedures you will follow in case when the financial statement are audited for the preceding period by another auditor and when the financial statement are audited for the first time. If after performing procedure you are not satisfied about the correctness of the opening balances, what approach you will adopt in drafting your audit report in 2 situations in mention above? 1. Okay. So first, let's see what is the thing that you should do when it is audited by someone else. If the financial statement are audited by some other auditor, okay, but it was audited, then what we are required to do? In that case, pursuing the copies of audited financial statement, including other relevant documents related to the prior financial statement, such as supporting schedules or audited other statements, will help us to gather or to obtain sufficient and appropriate audit evidence regarding the opening balances. Ordinarily, the current year auditor can place relying on the closing balance contained in the financial statement for the preceding period, except when during the performance of audit, okay, except when during the performance of audit, the auditor identifies that there is something, some misstatement or something in the previous year audit report. So if there is for the current period like possibilities there in the opening balances indicated, then in that case it is fine, otherwise I can relax. When it is for the first time, the second area, when the audit of financial statement is being conducted for the first time, auditor has to perform audit procedures to obtain sufficient appropriate audit evidence. Since the opening balance represent effect of the transactions and event of the preceding period and accounting policies applied in the preceding period, the auditor need to obtain evidence having regarding the nature of opening balance, materiality of the opening balance and accounting policies. since it will not be possible for the auditor to perform certain procedures like observing physical verification of the inventory, etc. Auditor may obtain confirmation, accept and perform suitable procedure in respect of fixed asset, investment, or area wise there can be different procedures. An auditor can also obtain management representation with regard to the opening balances. Now the second question was drafting of report. If the auditor is unable to obtain sufficient appropriate audit evidence regarding the opening balance, the auditor shall express a qualified opinion and a disclaimer of opinion as appropriate. Further, if the auditor concludes that the opening balance contains a misstatement that materially affects the current year financial statement for the current period, and the effect of the misstatement is not properly accounted or not properly educatedly presented or disclosed, the auditor shall express a qualified or adverse opinion. So this is what it was asked. Like first, how will you audit when it is audited by some other auditor? Or how will you audit when it is audited for the first time? Second, what will be the drafting of audit report when you are not able to obtain sufficient and appropriate audit evidence, or you are not satisfied about the correctness of opening balance? Another good question. In case of newly opened business, is there any need of opening balance verification? That depends upon when it was opened. So let's say, for example, if the opening is in the current year, then the opening balances will be zero. You need to just verify all the transactions from the incorporation. But the incorporation was in the previous year, yes, you need to verify the balances. Any doubt, guys? Any doubt with respect to opening balances? Okay. If no doubts, what I do is I'll quickly cover one more essay that is for the agenda for today. Essay 520. Pretty easy. There is nothing much in that particular essay. Analytical procedures, we have already seen multiple times this particular thing, analytical procedures. Okay. Now essay 520, analytical procedures. What this essay talks about. The scope of this particular essay is analytical procedures. When the auditor use the substantive analytical procedures, okay, or when it use analytical procedures as a substantive procedure, okay, and procedures near the end of the audit that helps the auditor in forming the overall conclusion, okay, then in that case this particular essay comes into the picture, and this essay provides the guidance how to use those analytical procedures. Okay. Now, even analytical procedures sometimes are performed as a risk assessment procedures also, as per essay 315. Okay. So that again depends upon when and where the analytical procedures are being performed. Now, the objective of this standard is to obtain again reliable and relevant audit evidence by using analytical procedures, and to design and perform analytical procedures near the end of audit that assist the auditor when forming the overall conclusion. And what is before we jump into the requirement of this particular standard, okay, we need to understand what is analytical procedures. Analytical procedures are nothing but the evaluations of financial statement items or financial information. For example, sales. If you evaluate the sales of current year versus previous year, if you perform trend analysis, if you perform some analysis based on the relationship between financial data or financial and non-financial data, then that's the analytical procedure. Okay, so Analytical procedure is evaluation of financial information. Okay. Now, analytical procedures also includes that investigation of fluctuations or slash, you can say, inconsistencies in relationship. Okay, what do you mean by investigation of fluctuations and inconsistencies? Let's say, for example, you are performing year-on-year analysis of sales, and you suddenly identify that in the current year there has been a huge decrease in the sale. That's a fluctuation. Till last year the sales were increasing, but in current year there is a sudden decrease in the sale. You will go and you will understand why in the trend analysis the line is coming down, why there is a fluctuation, inconsistency compared to the trend. That is something, investigation of the inconsistency or the trend, fluctuation. Okay. Now, when you are performing analytical procedures, or when the auditor is required to perform analytical procedures, then before performing the procedures, they need to consider few things. Okay. First, analytical procedures should not be performed alone. They should be performed with any other test of details. So they should not be performed alone. Okay. Then when I'm determining, okay, I am not performing alone, I need to perform with something else. But when I'm determining that, okay, particular substantive analytical procedure, I'll call it as a SAP, substantive analytical procedure, means analytical procedures that are applied during substantive testing. Okay. When I'm applying the substantive analytical procedure for a given assertion, I need to consider the suitability, okay, for that assertion slash risk. Now, what do I mean by suitability? For example, there is a rent, okay, rent expense. What you will do is you can reperform or recalculate the rent expense based on the rent per month as per agreement into number of months. So that is perfectly fine. You can do that. Suitable. This is good. If you want to ensure completeness and accuracy, you can perform this procedure. That's good. But if you want to ensure presentation and disclosure of rent expense, or existence, or not existence, but or you have a risk of fraud in rent expense, that the rent expense is actually not paid, it's a fake party or something like that. Do you think that substantive analytical procedure, this particular procedure, will give you that much comfort to these particular assertions? Answer is no. A particular analytical procedure may be good for the completeness and accuracy, but may not be good for other procedures, other risk or other type of assertions. So you need to check the suitability of the analytical procedure for the area that you are looking for. Let's say, for example, inventory. Okay. Or you can say bad debts. Sorry. Let's say, for example, I'll take up another example. Let's say account receivable. Now, in case of AR, you can recalculate the AR sales. Okay, plus opening balance, current year sales, opening balance less your receipt amount received. You will get closing balance. This is an analytical procedure. Or what you can do is, instead of this also, what you can do is compare AR balance versus AR balance versus last year and trend. You can do that. Okay, how much AR is last year? What is the trend for AR? Something like that. Okay, you can perform some analytical procedure. Will this analytical procedure give you comfort on the valuation of AR? Completeness on AR? Accuracy? Answer is no. This trend might not give you the appropriate and sufficient audit evidence with respect to valuation, completeness, or accuracy. It might not give you. Okay, it depends upon how much accurate the results are, or what is the trend showing, and a lot of other factors. So you need to check the suitability of a particular analytical procedure before you perform. Second, evaluate the reliability of the data. You need to understand whatever data you are using. Let's say, for example, if you are comparing the AR balance versus last year versus trend, so the balance of the current year, balance of the last year, and the trend that you have obtained are reliable. Is there any issue in the data? So how much suitable the data is, or how much reliable the data is, because on the basis of the data only you will develop an independent expectation. So see, in any analytical procedure, what you do, you develop an expectation and then you compare the result, okay, of the analytical procedure with expectation. For example, you developed an expectation that the sale will increase from period to period. But when there is a fluctuation, you compare that fluctuation with the expectation of increasing sale. Okay. Now, to develop the expectation that sale will increase from year to year, you need to have a data and how much reliable that data is. What if your data is wrong? Then your expectation is wrong and you will identify wrong fluctuations in that case. So reliability of the data is very critical thing. Okay. Then the third area is you need to develop, as I told you, develop the independent expectations, okay, to evaluate whether the misstatement or individual, fluctuation identified, how much misstatement is there for that. Okay. For example, let's say once you have identified there's a decrease in sale, okay, now you need to understand whether this fluctuation indicates any misstatement or not. Decrease in sale cannot be a misstatement, or might not be a misstatement, but it can be a misstatement when there was a window dressing or sales were not appropriately reported. It can be because of the fact also that the market was not performing good or company was not performing good. Depends upon the type of the underlying situation. So you need to understand whether the fluctuation is a misstatement or not. Okay, and then accordingly you need to decide the impact of that particular misstatement. Also, you need to understand the data with respect to the data, why the data was created. Why the data was created, what was the purpose of that particular data, whether the data is relevant for that particular area or not, and understand the controls that are placed on generation of that particular data or information that will give you the comfort. Okay, as I said, we need no need to perform substantive analytical procedures alone. They are required to be performed with other analytical procedures. Okay, you need to develop independent expectation of the amounts and ratios to identify the misstatement, and when there is any difference exists that is acceptable without any further investigation, then you proceed further. Otherwise, if the investigation or if fluctuation or exceptions are not acceptable, then you need to determine whether they are significant based on the materiality, inquire with the management with respect to about the fluctuation, gather more audit evidence, perform more audit procedures, alternate audit procedures to gather more audit evidence, and then accordingly you need to conclude. Okay, now when is appropriate to perform substantive analytical procedures? So substantive analytical procedures are generally performed over large data which are predictable over the time. If the data is small and unpredictable, you cannot perform substantive analytical procedures because you will not be able to generate an expectation. The data is not predictable. Okay, and substantive analytical procedures can be performed on financial plus non-financial information. It's not necessary that it's a financial information. For example, let's say number of headcounts of employees. Okay, now number of headcounts of employees and the number of days the employees or workers worked will help you to understand the production. Let's say, for example, last year I had 100 workers. They were working 8 hours a day, let's say for 300 days. Now I had these many man hours, and in these many man hours I produced this much quantity of goods. In the current year I have this many man hours and my production is this. I can compare the non-financial data with the financial. That is perfectly fine in substantive analytical procedures. So that is substantive analytical procedures, what the standard requires us to do. Any doubt? Any doubt with respect to this? Okay. If no further doubt, then what I suggest is we can go, we can, take the questions of this particular essay in next lecture, and we will continue the rest of 500 series in the next lecture. Okay. So I propose to keep it till here, till 5:20. I'll take up the questions of this particular essay in next lecture, and please be ready with the essays of the of rest of the 500 series in the next lecture. We'll cover that also. Okay, so if no further queries, then thank you guys. Thank you for your time. Thank you for attending the lecture. I'll see you in the next lecture.